5 things to consider when valuing a cannabis company. Number 1, is the company net profitable right now? That means everything, all expenses and all revenue, nothing left out, all executive salaries, everything. Is the company making more money, even if it's tiny, but is the company making more money than they're spending right now? That's what we're calling net profitable. Number 2, what's the total debt of the company? How much have they built up so far? If it's under $2 million, and this is everything, loans for property, equipment, any asset, taxes owed, suppliers, legal fees, any money they owe. Because for many cannabis companies, especially growers, this number, $20, $30, $40 million. So if the debt is under $2 million, then that's a much lower risk investment, giving a company a much higher valuation. Number 3, is the team that built this company so far, is that the team that's still running the show and going to continue running the show? Got to have that in place, because if this crew is still intact, then they've figured out how to solve problems, they know how to communicate, get it done, and see if this team has had the hard conversations amongst each other in terms of who owns what percent, who gets paid, because you don't want to have to figure out all of this on an investor's dime, and investors like to see as many problems solved as possible, and this is a key one. Number 4, did this company exist before the 2022 crash? Surviving the cannabis crash means this team knows the marketplace, their fingers on the right pulse, they know how to survive at the bottom of a market.
It has filed for bankruptcy and the shares are tanking after years of declining sales.
Closer to being today more scalable than one that just came into the cannabis industry and hasn't quite figured it all out yet. You want to scale what's profitable, what's working. Number 5, bulk sales versus packaging up the cannabis into retail sale at a dispensary. A lot of revenue right now is going into the bulk market, which ultimately might be leaving the legal market. All legal, no shade. But if you're looking at revenue that's primarily bulk sales, that's volatile. That could change. That can go down. It might even go up. But if the majority of the flower is being packaged and sold into legal dispensaries, that's a safer revenue source, thus a higher valuation for a company. So now take all 5. Are they net profitable? What's the total debt the company has built over the years? Is the same team in place? Did they exist before the 2022 crash? And is more of the sales going into the retail dispensaries than bulk sales? Add up all of those and take the gross revenue of this company and times it by 5 to 10, and that's an estimate of the value of a cannabis investment. If you don't have all 5 of these, then it's a higher risk investment and a much lower valuation.